Hey, what is up guys? Welcome back to ProTraderPath. I'm back with another video, and in today's video I'll be talking about the breaker block and the rejection block. And hopefully after watching this video you will never need to look for the rejection block or breaker block sort of videos. So yeah, without any further ado, let's start. Let's talk about the breaker block, and in this term I'm gonna talk about the bullish breaker block. So let's say you have a support level or a sell stop, or you can call it sell side liquidity level, or anticipated bullish institutional reference point. What that can be: a fair value gap, a volume imbalance, a liquidity void, things like that. Okay, that is aligning with your bullish daily bias or high time frame bias. Okay, so price from a certain point, it created a short-term low, it created a short-term high, then it violated that short-term low or it went below that short-term low. Okay, and then what happens is it reverses from your anticipated point or the support level. It can create a short-term high or a short-term low in the form of retracement, but what you want to see here is it's actually going above and closing above the previous short-term high that it created on its way down towards your reference point. So what that means is this is your liquidity grab, and the short-term high that price just violated, which should be acting as a resistance level, but price disrespected that resistance level. So that is your market structure shift. So now there is your market structure shift. The highest up close candle is your breaker block. What sort of breaker block? That is your bullish breaker block. So when price comes to that level, later on you can look for possible long setups or long entries, because this area previously acted as a resistance. Now price went above that, it came below or came down towards that area, and that should act as a support now. So if you know about support resistance, that's how it should work. Now when talking about this part, I'm gonna go to the live chart as well. I'll give you some examples, but when talking about this part, this specific breaker block is high probability when it aligns with a fair value gap around the same area. Okay, so if there is a fair value gap that is aligning with your breaker block, that is a very high probability breaker block. And if there is other fair values below that, most likely price gonna retrace or price gonna start to go higher from that breaker block area, or the fair value that aligns with breaker block from that area. Okay, so keep that in mind, that the high probability, why this is high probability. Okay, let's talk about that a bit as well, because a breaker block itself should act as a support. On the other hand, a bullish fair value gap or a buy side imbalance, sell side inefficiency, that should act as a support too. So you have two confluences alongside with the liquidity grab and higher time frame bias, all of those, that is pointing all together to a certain level. So when you have multiple confluences adding up or aligning together, that is where your high probability setup is. Okay, so that's why I'm saying if there is a fair value gap aligning with your breaker block, that is a high probability. And in this term, you can simply ignore your first fair value or any fair value that is around this area. Okay, the opposite is true for a bearish breaker or bearish breaker block. So you are looking at a resistance level, buy stops or buy side liquidity, and anticipated bearish institutional reference point. So what is that? A bearish higher time frame fair value gap order block, whatever, like you got the point already from here, right? The similar thing for the bearish part. And the same thing, price should grab the liquidity from its recent level or the anticipated level. It should come and close below that area. The lowest down close candle is your bearish breaker block. Okay, So price will violate the support that it got during this short term low was formed, and then that short term support area will later on act as a resistance. Now this is your bearish breaker block. And when is it high probability? Same thing, if there is a fair value gap aligning with your bearish breaker block, it will be your high probability breaker block entry. Okay, so I hope this part is clear. It's pretty simple, and without making it any longer, let me go to the real-time chart. Here is an example of your bearish breaker block. What happened here is price went to a bearish fair value gap. Okay, now I'm showing from the same time frame just to make things clear to you guys, but I hope you guys will understand this. Here is your bearish fair value gap. Before going to that fair value gap, price created multiple swing highs or short-term highs and short-term lows, but I'm looking at the extreme on. This is what we can anticipate as our liquidity grab. Now I have multiple lows over here, although this one will make more sense. As you can see from the drawing, it's not touching those lines anyway. So that's the low that I'm considering as the market structure shift, just to give you guys some example. And as you can see, there is the fair value that price created on its way down, and there is another fair value. But look where price actually stopped. It didn't go to the upper fair value, or it didn't respect the lower fair value. Where price retested is the lowest down close candle. What do I mean by that? You can see this candle's close, or the body of this candle, is lower than any other candle, although this candle has the lowest point, but this candle's body has the lowest close. Okay, not this candle, not this candle, not any other candle, even though this candle's low was until this level, but that candle's body closed lower. Okay, that's the lowest down close candle. Now look where price retested. So after this move, it retested to that bearish breaker block, and then it continued its move towards the downside until it reached or grabbed the liquidity, and then it went even lower. Okay, same thing, if I'm not wrong, I can see here as well. So I'm not saying this is a high probability thing or something, but just for the sake of understanding, price again took the liquidity here. Okay, from the short-term high, or it anticipated some order blocks over here, and then it gave you the market structure shift around this area, or break of structure in this case, since market is already trending towards the downside, and then it retested with one single candle to that breaker block. Okay, that's where price came, and then it started going even lower for the other liquidity levels. So yeah, I mean, this is an example for your bearish breaker block, and similar thing I think you can observe or find on your chart for the bullish on. So what is the rejection block? It's quite similar to the breaker block, but in this case we are not looking at the short-term highs and the highest up close candle. We are looking at the low that traded to a recent support level, or a liquidity that is sitting somewhere around this area, like way behind the time you are looking into it. And also maybe it can be some bullish institutional reference point. So in this case, the candle with the highest wick, or the swing low that was created with the candle or candles, from that candle's body, let's say this is a candle and it has a swing low like this. Okay, the bullish rejection block will be from the candle's body to the wick. This is your bullish rejection block. Now I will share a few things with you guys, but before I go to that, let me clear how we can use it or utilize it. Okay, so let's say this week came until this far, which is a support area or previous liquidity level. So from this area to this area, this is your rejection block area. Okay, so what sort of rejection block? This is your bullish rejection block. What we anticipate is when market after trading this is going higher, it will come inside of that area or zone. Okay, so let me draw a zone like that over here. It will come inside of that area or zone, trade inside of this area. Mostly it will look something like, let's say from here it will come inside of this with the wick, that's the lowest it reached, or it can reach as far as it want, but it cannot go and close below that, or I mean go and trade below that, not close. The wick cannot go and create a new swing low. If it creates a new swing low, then that one can be your possible rejection block. So what you want to see is price coming inside of this zone and then it's getting rejected from here, or maybe like violently rejected from here, however you want to mark it. I'll give you the live chart example, everything gonna be clear then. But remember that for a bullish rejection block, we are looking into regardless of the candle color. Okay, it can be any color, don't get it confused, or don't get confused. This candle can be any color. Regardless of the candle color, you need to know what sort of swing lows it has created. If a green candle has the lowest point, that can be your rejection block. If a red candle has the low or the lowest point, that can be your rejection block. So now for a rejection block, you can look for price to come inside of that area, trade inside of that zone. From the, for a green candle it will be the opening, for a red candle it will be the closing. So the opening or the closing to the lowest level that it went, or the low. Okay, so opening or closing depending on the candle color you are looking at, up close or down close, however you say it, to the lowest point. Price can come to that area, but it cannot trade below that. So price cannot create a wick below this red line, okay, the box or the zone. So if price respects, like trades below, yes, price can close their body inside of this area, but no wick or body can go past that zone. If it goes below that, that means this is not your rejection block. The new one that created a recent swing low, that can be your possible rejection block. Okay, and also how we treat this zone is as a order block. That price will come inside of that order block area and then it will go towards the bias or towards the direction we are anticipating. Now I'm gonna give you some references regarding that. I hope this is not confusing. I'm gonna give you the live chart example as well, but when I'm saying this, I just remember one thing. Like the day I was talking about the rejection block, I was actually live streaming, and one of my friend, he is a very good friend of mine, don't get me wrong, he actually learned from my own stream. Okay, I hope you can read this. So he is saying ICT told the up close body close is the rejection block, not the wicks. Okay, now when he was writing this, I was actually showing what ICT told or ICT talked about. So he immediately removed the comments, but since I had this overlay on my live stream, I went back to my stream after I finished it and I saw what he actually said during that time. So the moment I showed him the video from ICT on my live stream, he immediately removed the comments from my live stream. Anyway, I'm not showing it to show you guys that he is wrong, I'm correct, something like that, but I'm showing it because when I'm saying this, I'm glad that people are actually getting corrected who has already the knowledge to trade ICT. They are getting corrected by my live streams or my videos. Okay, so that's a very good thing. Now why I'm saying to act or respect or think of this rejection block area as your order block? Two things. number one, let's talk about ICT, what he has to say.
We treat this as a bearish order block. When price trades back up to the low of that range, that is your trigger. Now you can do one of two things. One, if you're aggressive, you can sell at that price and put a significant stop loss above that particular price level. Or you can wait for it to trade through it a little bit, and I'll leave that up to you in terms of all the additional insights that we'll be sharing over the mentorship about entry patterns. Or you can wait for it to trade above that level, and if it moves a significant amount above that highest open or close, in this case is the highest close of that bullish green candle, if it trades above that particular level and it does not trade to a higher wick high, you could be a seller on a stop below that level, so that way you can be selling on weakness.
So what I was saying is, I hope you heard it. So we can treat this as a bearish order block. Now you might think, okay, this is a green candle or up close candle, so this is anyway a bearish order block, right? You might think about that. So let me give you that as well. You see what he is showing here as a rejection block. Let me actually pull that video a little. So what he is showing here is a black candle that created the high, okay, and then here is your rejection block that he is showing that price retested or revisited. And also what he was talking about is he wants to see that price is trading above this open or closing price. So this is a black candle or down close candle. In this case, this is a opening price. So he wants to see price is trading above that opening price, but price is not going above that high or creating wick above that high. That will be your liquidity grab, and then you can expect for a market structure shift like what happened here, okay, but there is no liquidity grab. Now also another thing that I wanted to mention, now let me actually give you a little bit more about that order block part, because it's really important for you all to know what I'm giving you guys here. So if I'm not wrong, it's on 13 minutes and 7 seconds. Okay,
the bullish rejection block, and we treat this as like a bullish order block.
So I hope you heard that part. We treat this as a bullish order block. Now on my video or on my live stream, on my order block video, I was explaining what can be a possible order block, okay, during this moment. And when I was making this video, and even during my other videos as well, I talked about this. Listen to this carefully. This is me doing this from my own experience. I didn't do this because ICT talked about it in a rejection block, because before I was not actually interested in rejection block. Let's not make any controversy over there. However, this was my experience that was telling me, this was my observations that was telling me that if your order block, okay, listen to what I had to say or what I was saying during this one, okay, when I was talking about the breaker and order block. Here there is this thing that I talked inside of my order execution video, that when I don't find the swing low with my order block, okay, what happened here? The high was with my order block, price went towards the upper side, came down. The high was with my order block, price went around the min threshold, came down. In this case, where is my swing low? With the green candle, right? This one. So for my order block, it's, don't think like the only opening and closing is your order block. Order block is the high to low, okay? Order block is like this, but since the low is not with my order block, I want to add that lowest level with that order block, okay? And in this case, I don't need the high, I just want to see the opening and the lowest point that price went. So yes, that was me talking about that thing, I think 3 weeks ago, or even like all my trade execution videos, I talked about order block like that. Okay, and what I said is, when I see the order block is not with my low, when the low is not with my order block, I include that with my order block, because I saw that is what price respects. Now these videos came after the 2022 model, although the video here, the contents here are made in December 2016 premium ICT mentorship core content video. Okay, now this video is what people paid for. I already made video on my channel regarding what you should look for, what and from where you should start your learning process, not the 2022 model. Okay, if you are not a fan of me, you can simply unsubscribe me, because I'm here to give you guys the right way, the right path, the correct way. Okay, just the 2022 model is not good enough. Why I'm saying this is because there will be a lot of questions while learning from that 2022 models, and you will never find those answers until you watch this sort of videos. And that's why I made a video like, if I had to start new, from where I could have started. Okay, what should I look for? I have already that video. If you missed it, go watch it from my channel. Now let me get back to that. This thing I have already mentioned here. So that is your bearish, that is your bullish rejection block. So the opposite is true for your bearish rejection block. What is that? We want to see that price reach to a certain level, which is maybe a liquidity level of a old high or something, as a buy stop or a resistance level, or anticipated bearish institutional reference point. That can be your fair value gaps, order blocks, or whatever it is. Okay, on the higher time frame. Now from there, what you want to mark is the highest point the candle has created. It can be multiple candles together creating the exact same high, like multiple equal highs together here. Okay, so I'll show you some example, and you want to see that price is, so it will look something like this. Okay, regardless of the candle color, it will look something like this. Price created that high, so this specific area is your bearish rejection block, and what you want to see here is price from a certain low, maybe trading towards that, inside of that zone, not going above that high and creating a new high. It reacts from there, come aggressively lower. That is your high probability if it comes aggressively lower. Okay, if it comes aggressively lower from that area, creating some sort of imbalance or fair value gap, something like that, that is your high probability. So yes, the retest of the rejection block, price can close inside of that zone, price can close above the 50% level or whatever you mark here, but price cannot even make or create a wick above that level. Okay, like this, it cannot do that. So if it wants, it can trade inside of that, but the wick must has to, or the high. Okay, what is the wick? The high must have to be below that high of this rejection block area. So yeah, I hope that rejection block part is cleared. Now let me find some reference point to give you guys a possible rejection block. So this is not a very good example, but still I'm gonna give you this. Okay, so this is a bullish fair value gap. This is a bullish fair value gap. As you can see, this is the lowest point that price came, and this is the opening of that candle, and price went up, came lower, traded inside of that area, and then violently started going up higher. Now what ICT was saying is, you can either enter when price taps here, at that moment you can enter your long trade, or you can wait until price goes and closes wherever it wants to close, and then breaks away or goes away from that level. So he was talking about price retesting it, going above like this, and then you can anticipate a entry from wherever the point you can find over here. So in this case, maybe this closing can be your entry, or this fair value gap can be your entry. When price came to the fair value gap, you can enter and then go up for a buy side liquidity run, or whatever liquidity you can see on your left, or you are following a risk to reward, you can target like that. So yes, I mean, this is a bullish rejection block. Now this rejection block is not a very good example, I'm sorry about that, but I don't really want to make the video too long. Like here, okay, what happened here? So price is trading to a order block, bullish order block right here, that took all the liquidities from its left, and also it's taking liquidities on its way down from all these levels, okay, all these equal lows. Now this candle has created your rejection block. Price went up higher, came lower, retested that rejection block, then went up higher again. Okay, so whatever the liquidity level you can target it from multiple areas. What ICT said, when price triggers that is your aggressive entry, that is your riskier approach. So in this term, your stop loss needs to be few pips below the low of the rejection block, and then you can target whatever liquidity you are targeting, or based on your risk to reward model. However, this can be one of your entry, and the other entry can be right around here. Okay, so in this case, that's the closing price. Now when price closed there, you can put your entry there. Your stop loss needs to be at least below this huge candle slow. Like this is how you should look into it, and then you can target the liquidity that you can see on the left, which is this one. So in this case, you had to wait for some sort of pullback, or if you have any other better options or better levels to target, that's what you can target. Okay, so draw on liquidity is important. Anyway, I hope the concept is clear to you. Okay, that's what I am trying to show you here. I'm not trying to show you that this is the entry that I might have taken, things like that. I'm just showing you what could have been a possible. Now here is a good example. You see all these moves towards the downside. Okay, like good example means a example that I wanted to share. You see the low, the swing lows here created right here. I hope you can see this. So let me zoom it a little bit. So this black candle is the one that created your swing low. So what is your rejection block? From this to this. Now it is your order block as well, but that is your rejection block as well in this case. But also, like, there is no valid reason for this to call as a rejection block, since I'm looking into the same chart. But if maybe on the higher time frame there might be something else. Yes, so there is this huge fair value gap that price has created, and then the rejection block changes like this far. So yeah, I mean, I hope you got the point. Wherever the candle is, regardless of the color, now there is a rejection block that I can call, but since it took some liquidity and traded into a fair value gap, but the problem is there is no retest. I think there is a small retest, if I'm not wrong, because price went above that candle's high, closed above, then this black candle came and retested. So yes, I mean, it's a very short term retest, but still there is a rejection block because this black candle created that low. Now I hope that is good enough for you guys, and if you find this video informative and valuable, make sure to let me know that in the comment box. And if you have any questions or any suggestions regarding my videos, try to let me know that as well. It will help me figure out what sort of video that I should upload next on my channel. Okay, so yeah, until next time, take a very good care of yourself and your health and your family, and bye bye.